Welcome to the first episode of the Supply and Demand Zone Trading Masterclass. For the past 6 years, I've been trading using this exact framework, and in this series, I'll be breaking it down exactly how I do that step by step to help you in your trading. My students have also been applying the same approach, and they are seeing great results in their trading since using this strategy. So with that being said, let's get right into the first episode. In order to understand what a true supply and demand zone is, we first must understand what it is not. A very common misconception with supply and demand zone trading is that everybody thinks the highs and lows of price is what a zone is. And I will admit that sometimes a supply and demand zone can be at the high or low, but not always. A valid supply and demand zone must show a strong imbalance, meaning that if price is creating a low and it shoots up, it needs to be an aggressive move up. It can't just be a bunch of basing candles on the way up. We need to see a strong, aggressive move in order for it to be a true supply or demand zone. The most common misconception is that supply and demand is support and resistance. They are similar in the sense that you buy at support and you buy at demand and you sell at supply and you sell at resistance, but they are two completely different things. We need clear basing for our supply and demand zones, followed again by that strong aggressive move away. Notice how the resistance area here is just a general area where price is turning around. There's no explosive move, and sitting above is our real supply zone because of that explosive move. And this resistance actually acts as liquidity for us, which we will be breaking down in further episodes. So to quickly summarize the difference, demand zones are when we have an explosive move away after basing, and support is where price is generally turning around multiple times without any explosive moves away. Now let's touch on the basing of a zone and why this strategy makes logical sense. I just want to say that supply and demand zones are not created intentionally by the banks and institutions. They are created inadvertently, and they do leave footprints on the chart. These zones can only form because the institutions with millions of dollars are the only ones that can create an explosive move like this, especially in the currency markets. So there are two parts of a zone. The first part is the formation of the basing. This is when price is at equilibrium, meaning buyers and sellers are balanced. There's no explosive moves. There's just a range, and this is when the banks and institutions are actually accumulating their position. This is phase one of creating a demand zone. The second part, which we'll touch on here in a second, is the breakout. But it is important to understand that the basing is when the large players are actually accumulating a position before the explosive move away. Let's dive a little bit deeper into the concept of this strategy and why it is the most objective strategy. There's no subjectivity here. Nobody can sit here and tell me that retail traders like you and I can create a large move in price like this, an explosive move. Maybe in a penny stock, but not in the major instruments that the institutions are trading. And the concept is that, let's say they are the large institutions are buying a stock or forex pair or whatever. What they're doing is they are battling with the sellers. Let's say they have 100,000 buy orders to fill, and there's only 50,000 sell orders at that price level. After all of these sell orders have been filled, that is when we see that massive spike up and that explosive move. And these are the footprints that the large players leave on a chart. So how do we go about and actually trade this strategy? Let me be very clear. We are not trying to predict the large players' moves. We're not trying to predict when the explosive moves are going to happen. We are simply letting that explosive move happen. We are accepting that we're not going to be able to predict that and get in on that explosive move. And we are simply trying to get in on the second move. So once they show their hand, once the footprints are on the chart with that explosive move, there is reason to believe that there are potentially leftover buy orders sitting at that price level before that explosive move. Because again, the logic is there were so many buy orders at that price and so little sell orders that price shot up. Meaning, let's say they own 100,000 shares to buy, maybe there's 25,000 left over. So the concept is that we are buying on the return to the zone. And just a reminder, everything is just the inverse for a supply zone. Just want to make sure that's clear as well. So again, we're not trying to predict these moves. We are letting them show their hand, and we are simply putting our limit order at the zone on the return to the zone. We are trying to get in on the second move, not the first move. If you try to predict these first moves, I mean, maybe it'll work sometimes, but you definitely don't want to be predicting that. We want to let them show their hand and simply look to buy on the pullback back to the zone with where the leftover buy orders are, or where they're potentially interested in buying at again. And all of the slides you are seeing is from my full course supply and demand PDF that comes with the Diamond membership. It's like 38 pages, and we actually have more PDFs for confirmation trading and set and forget trading as well. So now we're on a blank chart. How do we go about and identify these zones from starting from a blank chart? It can be a little bit tricky at first, so here I am to explain what I would be doing first. Well, first of all, we're not looking for the basing of a zone. Remember, the zone has two parts, the basing and the explosive move away. The trick is to first just look for the explosive moves away. Do you guys notice any here? I notice a couple. Right? We have our explosive move away down here. We have another explosive move away down here. We have an explosive move away here, and then another explosive move away over here. Now, that is what we are looking for first. Obviously, if there's an explosive move, there will be basing. Most candles are basing candles. So we're not looking for the basing first. We're first trying to identify the explosive moves away. So the first zone I am seeing is this supply zone right here. You can see very explosive move down. This is as good as it's going to get. And then what broke that area of supply would be this area of demand right here. Let me just change the color so you guys can see the difference. That will be our supply. And then this, we can mark it in red for our supply, and this would be our demand, sorry. So you can see the demand actually removed the supply. Look at the difference here. The supply zone had a fantastic 10 out of 10 move away. The demand had an explosive move away. You can see that this is clearly a demand zone. That's an explosive move away, especially when we consider the basing candles that happened before it. It's just not as good as the supply zone move away. It still qualifies, and you can see we got a beautiful trade from that area of demand. And then moving on, this demand was actually removed by this area of supply. A little hidden single candle basing candle right there. What a trade from that area of supply there, as you can see. So the supply zone here had a very good move away, definitely better than the previous demand zone, but what a trade from that area of demand. And then lastly, when we go over here a bit, you can see we have another, let me just clone this right here. We have another very, very obvious move away down here. You can see explosive move, basing candle, where the large players were accumulating a position. And then as we pushed up, we had another blatantly obvious one over here. And this is just a great lesson on, we only actually had one zone fail above, the supply zone failed, but these three trades right here worked and this one wasn't filled. So it's a great lesson on, okay, the best zone on the chart is probably this demand zone over here and then the supply zone on the left. The supply zone worked over here, or the supply zone failed, and then this demand zone down below that broke it and we got a nice move off of, it worked for a beautiful trading setup, and it wasn't even that good of a zone. And then our great zone, supply zone here worked great. Our very good demand zone down below worked good. And then this demand zone down here was not filled yet, and that's part of trading as well. So hopefully you guys are understanding the concept of when you open up a chart, look for the explosive moves first, and then the basing will pretty much always be there. There's always going to be basing candles. We are looking for those explosive moves away in price. And I mean, I'm sure there's a couple more zones in here. I'm just showing the more obvious ones. So again, if this is what you're doing, if you're opening up a blank chart, start by identifying those explosive moves, and then we go from there, and then keep all of the zones on your charts as you go along, and then we can find the zones that end up removing those zones as well, which is a very, very important concept we'll touch on in later episodes. So again, just a great lesson on these really good zones failed right here, and then the really mediocre zone for the demand worked, and then we had a great single candle basing as well. So the basing, easy to identify. The explosive move away can be a little bit tricky at times. Start with the more obvious ones, and then you can get into a little bit more detail as you go on. And remember, we are not trying to predict that move, right? We have let the institutions show their hand. They showed their footprints on the chart by creating that explosive move to the downside, because only large players can create those large moves. We cannot do that. So now you know banks or a large player or institution, which is what we want to trade with. We want to trade with them. We don't want to be buying where retail is buying. We want to try to buy and sell where the large banks and players are trading from as well. So that they showed their hand there, and now what we do, we don't predict it. We simply place our order at the zone, our limit order. I'll get into stop losses and take profit later, but we simply let them show their hand, right? And then we be patient. Patience pays, guys. We be patient. If the zone doesn't get filled, then we got to move on. But the zone was filled here, and our take profit was hit pretty easily. And again, I'll get into trade management later in later episodes, but this is the core concept of supply and demand trading right here. And like I said at the beginning, this is only the first episode of the 10 episode or even more series on supply and demand zone trading. If you guys want to learn more, make sure you hit that subscribe button. If you are new to my channel, hit that like button as well if you enjoyed this video and if you learned something, guys. So stay tuned for further episodes of the supply and demand trading bootcamp.